The saga continues with Elon Musk and Twitter. Paul, just what is going on? I'm a normal person. I can't figure all this out.
So one of the most common questions I'm getting in our community is, Paul, why the heck is Elon trying to buy Twitter? And he has said it's not about the money. He believes it's more important for him to use his money to promote freedom of speech, in his words, than it is for him to make money. And I personally believe when I see a business like Twitter, which is kind of struggling, I do know people go to Twitter for news. I mean, yes. I do like that. Twitter is becoming the news source, has become the news source for a long time, for especially young people, how they get the news very quickly, right? So with Elon, I think he was just getting aggravated with what he thought was Twitter kind of stifling people out there and saying, you can't say this, you cannot say this, etc. And Elon's libertarian. He wants freedom of basically swing as far as you can without hitting your neighbor's face, right? That's kind of the idea behind the libertarian view. But with Elon, he has $300 and some billion. I think in his eyes, it's like, listen, I want this to be a private business so we can focus on growing the business to be what it really is meant to be.
A silly question is, couldn't he just make his own platform? Or is it too difficult?
I think Twitter's done a really good job of making it the news source for people.
So he's really buying the customers that are already there.
Correct. It's like, how would you replace Tesla right now? That's a hard thing to do. So Jack Dorsey has even said, the founder of Twitter, who I think is a little wackadoo, he even talks about how much he hates the board at Twitter, that they're the reason for the problems they have.
Yeah, Elon's saying that he's going to pay the board $0 if he acquires the company, cut their salaries.
Yeah, and I'm a big believer in, I don't think board members should be paid. I think they should have no financial interest in the business and get nothing from the company. That way they can hold the people in the company accountable without any bias there. If anything, they should buy their own shares to have some sort of vested interest in there. But we won't get into that. The whole thing about Twitter, it's funny, when the Elon Musk thing happened, what did I say in a video?
You talked about the poison pill, which happened this weekend.
Pill. Do you remember what a poison pill is?
It's funny. You mentioned, we didn't do a video on this last week. You mentioned this, because I'd never heard of this, the concept of they can just issue a ton of shares and make Elon's 11% stake much lower. And I sort of joked this weekend is that Elon is now sort of feeling the wrath when a company you love starts issuing a bunch of shares, your ownership goes down. And we saw it in real time, which is hilarious.
And this is a very common thing in corporate America. They have what's called a poison pill, where if somebody comes in and tries to acquire a lot of shares, they issue a ton of shares to dilute them. As an example, all right, so let's say Twitter had 100 shares. Elon owned 11 of them, which was 11%. Very simple, right? 11 out of 100. What Twitter, I don't know what their poison pill provision was, but maybe they take it to 150 shares. But guess what? Elon still owns 11 shares. So what happens now? His ownership now goes down to like 7%. Because 11 out of 150, whatever the number that is diluting him. So it doesn't give him enough percentage of the company to do what he needs to do.
And diluting everyone else.
But that's the thing. Then if you're an investor, you are also getting diluted. But Twitter's idea is, well, no, we're protecting the business, blah, 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 blah. So Elon is taking his $300 billion for a ride, right? The guy's just sitting there saying, listen, I got the money. I want to promote freedom of speech. I want to promote all these things that I believe in, which a lot of people do that with their money, right? That's the whole point. When you have obscene money, you have to look for things beyond just making money as a way of living your life. And I bet you it'll probably do better with a private ownership than public.
So, Paul, the market cap of Twitter at the moment is $37 billion. The stock price is a little like $47. Elon's offering to buy it at $54 a share, and I think $43 billion or $54 billion.
43, I think.
Is he overpaying?
So, guys, what we have here is we have our software. What our software does, it allows us, obviously, to go look at the company, and I am going to use our stock analyzer tool to figure out what I would pay for Twitter.
That's a good point.
So let me go to the 8 pillars first and see what it's like.
Wow. It's ugly.
Oh, my Lordy. Guys, everything. I mean, the only thing they have is revenue growth.
So, folks, these are the 8 metrics we use, a very basic stance on should we be, what to look at and how to screen for great companies. We want a lot of checks as a basis to say, do we look deeper? But, Paul, this is ugly.
So I've bought companies that have 8 X's in them. At one point, Carnival Cruise Line did, and I bought it like $12 or $13 a share, and it was down to 7, and it looked awful. So don't just follow this, but this tells a story. The story here is Twitter has to figure out how they make more money. Okay, I don't know what their plans are, but I'm going to quickly go to the income statement. Are they growing revenue? Yeah, they are growing revenue pretty consistently. Profit is just hard to come by. So let's go to the stock analyzer tool. Now, the stock analyzer tool it has to assume that there's profit along the way. Our stock analyzer tool is used for that because every investment is the present value of all future cash flow. That cash flow can be negative, but right now our stock analyzer tool in its current form has to assume profitable business because we want to value businesses that have staying power. But let's assume that Twitter was going to make the same amount of money that they did in the years they made money. So they made about $2.7 billion on 6.5 billion in revenue. That's pretty good. Let's see if there are any one-time gains. No, okay, so that's about 25%, 30% profit margin, right? 30%. So let's go to the stock analyzer tool and let's see. Let's go to revenue growth. I'm going to be conservative. I'm going to say 7, 10, and 13% revenue growth. Profit margin, 20, 25, and 30%. Same with free cash flow. Even though they've never done this in their history over a long period of time. PE, 13, 15, and 17. Because guys, I just want to be conservative and it has its issues. It's not the leading social media company. It doesn't have a moat. And I think it's starting to get a moat in the world of news, but it's still hard to come by. And I always do a 12.5% return because I want, if I can get a 9 or 10% return by buying an ETF, give me a reason to buy this. Give me my margin of safety. Analyze button. Okay. On the high side, it's worth it. If my numbers on the high side are correct, with my revenue growth, high profit, everything, yeah, the stock's probably worth it if they start making money today. And they have this consistent growth of making money. But on the low end and middle range, we're at 20 and 33 bucks. Now, I don't think this Elon thing is going to happen. So if I want to buy Twitter at $33, I just click the add to watch list. It automatically puts Twitter in there, notify me when it hits below 33, and I can go to my watch list and see all the companies that I have and their target prices. So I look at Twitter saying, yeah, Elon just wanted to, usually when companies are offered buyouts, when they're publicly traded, they had to be much higher because you want to give the investors a reason to say yes, right? So this is what they have to do. And I don't blame Elon for doing it. If I had 330 or whatever number he has, $1 billion lying around, especially in an overvalued company like Tesla, I'd go for Twitter probably.
I know that Mo on the Everything Money trading channel is talking about this volatility and how you can day trade Twitter. But as a long-term value investor, you can't really be in love with the unknowns with this company. If Elon buys it, great. There may be an arbitrage play buying now and making the difference. If he backs out, then all of a sudden is Twitter going to fall?
Oh yeah, absolutely, it'll fall. And especially with the dilution. If they ended up doing the poison pill, which I don't know if they officially did it or not. I think they did, but guys, these are all going to affect the valuation of the company, of the stock price. That's just it. Because now you're splitting up the company amongst more shares. And if all of a sudden Elon backs out, they're going to say, well, I mean, look at this. Usually when it's a company that's a reputable buy, this thing should be at $53 or pretty close to it, like 51, 52 bucks, but it's not there for a reason. Now, maybe Elon comes in and increases his offer, et cetera, et cetera, et cetera, because a lot of times that's what these companies will do to try to get some more higher bids. They'll sit there and play hard to get. Okay, maybe so. I don't know. But all I know is from my standpoint, based on my valuation, Twitter is not an obvious yes. It's more of an obvious no to me than an obvious yes. So I am not in it at $47 a share.